Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES managed to print a new high. It traded above yesterday's high of 31.5, which was initially rejected, but buyers continued to be in control, and that area around 18.5 to 21 continues to be a very key area and is a launching point for this upside move. So at this point, heading into the open, we know that the buy side is in firm control. The other markets are also holding up pretty well and are very close to the upper edge of their recent range. So all the markets are pretty much very close to breaking out. Now we just have to see whether NASDAQ and Russell can put in that breakout. So currently, ES could be leading to the upside, but until we really get participation from these other markets, it could be a little tougher to get a strong continuation move. And the challenge for this morning is that ES is opening on a decently wide gap to the upside and opening near the recent highs, recent balance area highs. So that makes it a little bit tougher to find the right spot to engage. But given how strong the market has been, if you want to participate in the upside, and this is a legitimate upside move, then you are going to have to get involved at a relatively aggressive price, right? Or be willing to get involved at a relatively aggressive price. So off the open, we are going to be using the 26.75 to 28.75 as the micro bull bear zone. And as long as ES can hold above this area off the open, we know that on the smaller time frames, the buyers are still maintaining control, and that can lead to a break above yesterday's high, a move up towards the overnight high, the initial resistance zone at 36.38.5, and then 41.75 to 44 quarter would be the secondary objective on the day time frame. And if you're holding the micro bull bear, then 41.75 to 44 quarter is a very doable target. Now, so far the markets are continuing to run on fairly light volume, so ideally you want to see a pickup in volume off the open as well, especially if the other markets are starting to participate in the breakout and start trading above their recent range. Then ideally you'd like to see a pickup in volume. Doesn't mean that we can't head higher on light volume. Volume is really just more indicative of the range potential of the day and not indicative of the directionality of the day. So if we're holding 26.75 to 28.75, and even if we're looking at a 12 to 14 point range, we can still easily head up to the 36 to 38.5 and pretty close to the 41.75 to 44 quarter resistance zone. And then that's actually a pretty decent zone where responsive sellers can be active on first test. So immediately off the open, we know that the market is set to open at a fairly aggressive price, but with the understanding that if the market is truly strong, then it will likely hold these aggressive prices and just continue higher. Now, on the downside, we do have support at the previous VPOC of 2024, and then the key support on the day is 18.5 to 21. But given the overnight market structure, if this is going to be a breakout market, then ideally you don't want to see a pullback to 18.5 to 21. Ideally, you want to see it holding, above the previous VPOC of 24, and ideally above 26.75 to 28.75. So in the event that we do come down 18.5 to 21, that would certainly put that breakout scenario into question. It doesn't mean that you can't get short-term edge off that zone. Buyers can still defend that zone on that first pullback, but it would definitely lower the odds of a strong upside break. And that's something we'll have to take into account in real time to see how the market is pulling back in the event that it does pull back. Now, if we break 18.5 to 21, then it brings the bottom of the balance into play at 12 quarter to 14.75. Responsive buyers can still defend that area on first test, and that's really the important support area on the downside because it defines the bottom edge of the recent 3 to 4 day range. So the primary scenario today is still the upside scenario. Again, we still have to be prepared in the event that the breakouts do not occur in the other markets, and that can lead to a failure in the S&P as well. But just because we're prepared for the downside doesn't mean that's the scenario we're focused on. Right now, the scenario that's actually in play is an upside move, and for that reason, our focus is going to be more on long setups, unless there are very clear signs that the markets are clearly failing at their balance area highs, where Nasdaq and Russell, if they put in a pretty decent range bar to the downside, and there is downside momentum and just a lack of broad market strength, then of course those are things we need to take into account in real time. But absent any clear-cut signs that the market is failing, our focus is going to be on buying pullbacks into support, or even just buying at an aggressive price, looking for a move up towards at least 36 to 38.5, with very good potential to tag 41.75 to 44 quarter, and then that's the zone where it can be a hurdle to the upside, and responsive sellers can be active there, and that can be a tougher zone to get through. So those are the main ideas heading into the open. Let's see if the market can maintain above the micro bull bear, and we'll take it from there.